G'day folks, Jim here from Orchard Forex. It is Saturday the 23rd of January. Well, it's been a busy week in which we saw the new Biden administration take it over in the US. That saw stock markets, US indices make all-time highs, but they've since failed to build on those gains. And ever since both they and most other assets, including the US dollar, have been tracking sideways in choppy consolidation mood, really. And that's despite some strong US data on Friday. The mixed data, though, has seen a bit of a downturn in the jobs outlook, although we did see some strong PMIs, manufacturing, services and composite PMIs in the US all easily beat expectations. It had little effect on Friday. And I think the market's now looking forward really to what the Fed has to say next Wednesday at the FOMC meeting. In the meantime, US businesses have reported a strong start to 2021, buoyed by hopes that the vaccine developments will mean that the worst of the pandemic is behind us, and that the new administration will provide a stable and supportive environment for economic growth going forward. I'll start this week by having a quick look at the trends table, as you can see below, and then we'll go through and look at some of the currencies and the stock markets, and at the end of the video we'll have a quick look at the calendar for the week ahead. And looking here at the trend table, the most interesting thing I think is we can see this consolidative area, or this mood that we're currently in. All the daily charts, or a lot of the daily charts, are showing a pretty neutral bias. So there's not an awful lot that we can cling on to start the week. But I do think that as the Biden administration does take over, we'll probably see further gains in the stock markets particularly. And I wouldn't be surprised to see further weakness down the track in the dollar. The safe haven demand that we have been seeing in the US dollar recently, I think that might dissipate somewhat now that we've got the handover in power in the States behind us. So without further ado, we'll just go and have a look at the dollar index chart to start off with. And as you can see here, the DXY, the dollar index, it does look pretty neutral, possibly turning a little bit higher, but let's go and have a look at the charts. So here we have a daily chart of the dollar index, and as you can see, it's hanging around above the early January low. It did come off a little bit over the course of the week, but really it's traded between a 90 and a 91 range, so it's pretty tight. The indicators not telling us an awful lot. Perhaps there's a room for a bit more of a recovery in the MACDs. And moving forward to the weeklies, as you can see, that they're looking as though they could raise a little bit further, but we have got the 100-week moving average right ahead of us at 91, the figure, and then this downtrend from way back when, March 2020, that comes in around 91.5. So that's going to be decent resistance if we get there. But the weeklies are showing possibly some very mild upward momentum. Overall, it really wouldn't surprise me, though, to see further consolidation ahead of the Fed on Wednesday. And then we've got a busy couple of days of data heading into the next weekend. So we're going to have a look at the calendar in a minute. But until then, I think we're probably going to continue to chop around current levels. So we'll have a look at the euro. Okay, here we have a euro chart. Actually, let's go back to the four-hour chart. And having corrected off the high in early January, we came down. We've sat on this 38.2 FIBO level of the move up from late October. So I think this is probably corrective. The 4-hour charts do suggest we could go a little bit higher, but I think I'll probably be tending to sell into strength, moving up towards this. We saw it sort of above 122. I think I'll probably be looking to sell into some strength, because I think eventually we're going to come back down, retest this, and possibly retest this trend line down here just below 120. That remains to be seen at the moment. We've got the 55-day moving average down here as well. So this 120.65 area, 120.60-65 is going to be strong support. But as I say, I do think we can go down eventually and test this 120. And below there, we've got good support at the 100-day moving average and the 23.6%. That's around 119.5. But I'm not expecting anything really much in the way of directional bias until after the Fed on Wednesday. We're going to have a look further out. The weeklies are not really telling us a lot. The The indicators are, let me just blow this up. The indicators are possibly topping out a little bit, but there's not an awful lot going on. I just think we're possibly going to have a slow drift back towards this 120 area over the next period of time, perhaps. At which point I'll probably be looking to buy it again, because I think eventually we can take out this this peak here, which is at sort of 120, 123.5. Don't think we're going anywhere close to that this week, but eventually I think we can take it out, and we probably head on to sort of 124, 125, but that's for further down the track. Moving along to dollar yen, which is basically just too high a basket. It's very choppy, really not doing an awful lot. The 4-hour charts are suggesting a little bit of minor strength, and we might come up and test this trend line, which we can see easier on the dailies. So here we have that trend line. I wouldn't be surprised at some stage to see us take this out. This is sort of 104. If we do take it out, there's plenty of resistance up here at this sort of 104.75 area, 104.50, the 100-day moving average. So I'm not looking for an awful lot, but I kind of think if the numbers continue to be good from the States and the US yields will remain relatively firm, that should underpin the dollar and send it a little bit higher. On the downside, though, if we fail to hold this sort of 103 area, 103.30, 103 the figure, then I guess we're heading back down to 102.50, 60. Don't really think that's going to be the case. I'd probably be a buyer down there if we were looking for another or a continuation of the choppy trade. Buy it at 102.50, looking to sell it out at 103.50, but I'm not even sure we're going to see that. If anything, I'd prefer to look for a break of this topside move here to take us a little bit higher. Sterling was interesting. Let's have a look at sterling. Now that did make a new 2-year high, I think, on Friday, so 137.40 odd. It came back down to finish below 137. If we go and have a look at the daily charts, you can see we've got these tops here, and sterling at the moment is unable to break above those. But if we move this up, this could be, I'm not sure if it is or not, a reverse head and shoulders. Now, if that's the case, that's 20 big figure moves. So where are we now? 136.80. So 156, 157 would be the objective from the bottom of the head to the neckline. And the charts look quite good. This is a weekly chart. Sterling does look fairly positive. So I kind of think that eventually sterling is going to break to the top side. Having said that, for the time being, with Brexit and with the pandemic situation in the UK, and also the softness of the numbers currently, I can't really see sterling really needing to go too much higher from current levels. So I think we'll probably continue to chop around here and bide our time. But eventually, I think we're going to take out this 137.5, 138 area, and we possibly go to 140 and possibly even 150. For the coming week, if we go back here, support will come in at around this sort of 136.20 and down around here, sort of 135 or so, 135.15. I'd certainly be looking to buy dips, but and I was be looking to buy dips probably with a stop loss below this level here, 134.50 or so. So that's about that for sterling. The Aussie's in the process of breaking minor uptrend resistance off this low back here from middle of October. It's going to find further support down around this sort of 76.5 level, and again at sort of 76.20. A break below there could see a move back down to 75. I don't really expect to see that at the moment, and I think we're going to continue to consolidate. I'll be looking to buy it at around the sort of 76.25, 76.5 level, and for the time being, I'd be looking to sell it out if we got back up to 78. Longer term, though, I still like the Aussie. The dailies, the dailies actually are looking a little bit heavy at the moment, so I suspect this consolidation is likely to continue, and we've got this greater degree of trend support going back to January of last year, and the support there comes in around 75.50. Certainly, if we ever saw it down there, I'd be looking to buy it, but I don't think we're going to get there. Once or if and when this 78.20 is taken out, then I think we can probably head on towards sort of 79, 80 cents, and possibly even up to this sort of 81 and a quarter, but that's a long way off at the moment. The weeklies, though, they do look positive, and the monthly charts, they also look positive, although I haven't really got an awful lot of data here, but they are pointing higher. So I do think we're eventually in for a test of this sort of 80, 81 level, and don't buck the trend, I think, is the advice here. The same would apply to the Kiwi. This is a Kiwi weekly chart, and once again we've got a very solid uptrend. The weeklies do look a little bit toppish at the moment, so as I've said, I think we're in for further consolidation. Not too far removed. 70 to 73 range, I think, covers it. You buy the dips. Eventually, I think we probably take out this high at sort of 70. Where's that? About just above 73, and we move up towards these levels here, sort of 74.20, and possibly even to this high up here at 75.5. That's a long way off, but at the moment, look for the range trade and preferably look to buy the dips, I think. Now, if we move forward to the stock markets, so Joe Biden's victory saw a new all-time high on Wednesday, and since then we've just come off a little bit into consolidation trade, but we're not too far from those highs. The 4-hour chart's looking a little bit heavy to start the week. I don't really think we're going anywhere too far until Wednesday. The daily charts equally, the indicators look pretty flat. They're not doing an awful lot. Perhaps we could see a little bit of a movement lower. The stochastics are somewhat overbought, but it wouldn't take much of a move down to relieve that. And the only point of concern to me is that the weeklies are quite overbought now, and they're showing a degree of bearish divergence. So while I prefer to stay long as the new administration gets underway, I think I'd be raising stop losses fairly close behind. I'd probably have a sort of 40-50 point stop loss underneath. As the market makes new highs, I'd have a trailing stop loss 40 or 50 points under those highs, or under current levels anyway, and be raising it at the end of each day. And the same applies for the other US stock indices. As far as the Aussie is concerned, so here's the SPY on the ASX, and as you can see, that's been ranging sideways really since the end of November. Not been doing an awful lot, but it does look to me as though we could be. We've got a slightly rising trend support here, currently sort of 65, 60. That's some way off, but I think eventually we're going to take out this sort of 6,800 level. The ASX 200 is already at 6,800. The SPY is slightly lower. It's 50 points lower. So I think we can take that out, and eventually we move higher. The weekly charts tend to suggest to me that this is a bull flag, and that eventually we're going to come back up here and test this level here, which is at sort of 71.30. That's in the SPY. I'll just have a quick look at the ASX 200 itself. So this is the ASX 200, which closed basically at 6,800 on Friday, just a little bit below. And once again, I think this is possibly a bull flag, and we're going to, I think, eventually break higher and head up towards these highs, which is sort of just shy of 7,200. So the weekly charts, as you can see, look pretty good to me, and I'm more positive on the ASX than I am on the US indices at the moment. So heading towards the commodities, and gold is awfully choppy. I'm actually steering away from gold at the moment. Right now we're sitting between the 200 and the 100-day moving averages. It wouldn't surprise me to see that continue to be the case early in the week. My view is that we've got this trend line support here, and we've also got this low down here. When's that? Sort of 1800. I'd probably be a buy down towards 1800 with a stop loss certainly below this sort of 1765. On the top side, I think you probably sell it at around this level, sort of 1960 if we see it, with a stop loss. Well, I guess we probably need to leave a stop loss just above 2000. I don't think we're going really to either of those levels early in the week, and somewhere between sort of 1800 and 1900 looks likely to cover it. The daily indicators are pretty flat. They're not really showing us anything, so I don't really have too much of a view either way. and the same applies to silver. Silver is actually sitting above both the 100 and the 200-day moving averages and this rising trend support here. But the parameters here look to be sort of 27.70 down to sort of 24, say call it 24.30. There's enough room to do some damage there. Nearer home, we probably don't go much above sort of 26.15, and we probably don't go much below 25 or 24.50. I don't think. So I'd choose a range, trade that without looking for too much bias ahead of the Fed on Wednesday. The daily indicators are pretty neutral. Once again, not telling us an awful lot, so I wouldn't get too inspired either way. Looking to oil, and on the daily charts for West Texas Intermediate, we've got this channel here, and it wouldn't surprise me to see that continue to hold. As I said last week, I think trade a 50-55 range. The same really applies. We've got plenty of support on the downside. This resistance up here, it's around 55. I think continue to look at 50-55 as a range with a tight stop loss either side. Longer term, I think we're going to probably break to the top side, but that's some way off at this stage. My eventual target will be somewhere around the sort of 60-65 level, but increasing supplies in the States are probably going to hinder the top side for oil at the moment, particularly if the pandemic continues to wreak havoc on the economy there. The economy fails to open up again for the next few months, then I think oil can probably drift a little bit lower. But longer term, I like to buy it. I'll have a quick look at one of the crosses, euro sterling. And as we pointed out last week, there was strong support at this line for euro sterling. This is a daily chart. We actually did make a break on the downside, where it immediately ran into weekly support at the 100 and 200 week moving averages. That's held, and going back to the dailies, we've seen a pretty sharp reversal higher. Overall, though, I think with sterling particularly looking good and the euro looking as though it's going to be tracking a little bit sideways, I think the cross will come back down. We will eventually take out that weekly support, and I think we can possibly eventually head towards this sort of 87.50 level. So in the meantime, as far as the dailies are concerned, I think I'd allow a bit more room for the top side, and I'd be looking to sell it at around just below the 200-day moving average, sort of 89, sort of 89.75 if we get up there, and I'd have a stop loss really above the 100-day moving average at 90.30, but looking eventually for a move back down here. So I won't go on with too much else today. We'll just have a quick look at the calendar for the coming week. Okay, as far as the calendar is concerned, we start off quietly enough for Monday, Tuesday. We got the IFO, it's Australia Day on the 26th of January on Tuesday, and there's not much to come from the States. Looking into Tuesday, BOJ minutes, UK unemployment, and once again not an awful lot from the States. Consumer confidence, that might be of interest. Also the weekly oil stock market, that might provide some activity in crude. Things begin to liven up a little bit on Wednesday though. We've got the Australian CPI for fourth quarter coming out. Not much from Europe, but then of the durable goods orders, and of course the FOMC statement and press conference to come from the Fed late on Wednesday. Looking forward to Thursday, we've got some minor European stuff, but ahead of the German CPI. And then we've got a busy session for the US. We've got the GDP, which is going to be the highlight, but the housing data as well, new home sales, the PCE numbers. And we also, then we got going to Friday, Japan unemployment, and another busy session for the States coming up. We've got the German GDP and unemployment ahead of that. But once again, we've got the PCE index and the pending home sales and plenty of secondary data to come from the States. So it's going to be a fairly busy end to the week, and we might see some directional bias then. But really, until Wednesday, I think I'd play it fairly safe and look for choose a range in whatever it is you trade with a fairly tight stop either side. waiting on the FOMC on Wednesday. So that's about it for now, folks. Have a very good week, and we'll do another video this time next week. Cheers.